Very good morning to everyone present here. Today is going to see the subject of income tax. The income tax, there are 5 heads of incomes. Income tax is a major source of income of the government of India and the state government and the central government. Today we going to see set off and carry forward of losses. First we see what do you mean by set off and carry forward of losses. Set off means the one loss can be set off against other source of income or other heads of incomes. Other source of income we cannot set off. Going to see other heads of incomes. First we see why we set off and carry forward. If there is a loss from one or more source under one or more heads of incomes. Rules are covered under section 70 to 79. The mode of set off and carry forward. There are 3 steps is followed. Step 1, inter-source adjustment under the same head of income. Section 70 is covered. Step 2, inter-head adjustment in the same assessment year. Section 71. Step 3, carry forward of losses. These are the 3 steps is going to set off and carry forward of losses. First we see inter-source adjustment. Section 70. First we see what do you mean by inter-source adjustment. If there is a loss in respect of any source under any head of income for any assessment year, then it can be set up under the any other sources under the same. It's called the inter-source adjustments. For example, we see example, business A is 1 lakh rupees, business B 70,000 rupees, business C is 1 lakh 20,000 rupees is loss. The business is the same age. There are 3 kinds of business. 2 kinds of business got profit, 1 business got loss. This loss can be adjusted same head is called the inter-source set off. For example, business A 1 lakh, business 2 70,000 is got profit, business 3 is got loss in 1 lakh 20,000. This loss can be adjusted against same head of is business A and B. The net results of 50,000 rupees. This loss can be adjusted against remaining of business profit of business A and B. The one more example we see house property X and house property Y. The house property is the same age. The house property X got profit 75,000. House property Y is got 40,000. The net result is 35,000. This loss of house property Y is 40,000 can be adjusted against house property income of rupees 75,000 in house property X. The net result of 35,000. This loss can be adjusted in the same head. Next we see inter-source adjustment. Section 70. Some of the exemption we have. Some of the exceptions. Loss from the speculation loss. The loss from speculations can be set off against speculation income only. The speculation loss cannot be set off against any source of income or any heads of income. The loss from speculation can be set off against speculation income only. The one more exception, the long-term loss. The long-term loss can be set off against long-term gain only. They cannot be set off against any other source or any other head of incomes. Now one more exceptions, the loss from activity of the owning and maintaining the resources. This loss can be set up against the same owning and maintaining the resources. Loss cannot be set off against winning from lottery, crossword puzzles, card games, etc. Next we see the inter-head adjustment. Section 71. Now we see inter-head adjustments. This loss can be go for the other heads of incomes. When there is a loss in respect of any head of income for any assessment year, then it can be set off against income from the other heads. For example, now we see salary income is 80,000, house profit loss is 30,000. The both are one loss and one income is a different head of income and head of losses. The one income loss can be set off against another income of our incomes. Here salary income 80,000, house profit loss is 30,000. One head is profit, one head is loss. This is called the inter-head adjustment losses. Here net result is 50,000. The 30,000 loss from the house property can be adjusted against salary income of rupees 80,000. Here also same some exceptions also. Inter-head adjustment. Section 71 some exception. Here also same loss in speculations. Loss in speculation cannot be adjusted in other heads of incomes, the loss can be speculation adjusted in the same speculation income only. And also loss under the capital gain. Capital gain loss also can be set off against capital gain income only, cannot be adjusted against any other heads of incomes. Next, the loss from activity of owning and maintaining resources. This loss can be also set up against the same income only, cannot be adjusted against any other incomes. And next, the loss cannot be set up against winning from lotteries, crossword puzzles, card games, etc. This loss cannot be set up against any other rates of incomes. And also one more exception here, the business loss. The business loss cannot be adjusted against sell incomes. This is very big important. The business loss cannot be adjusted against sell income. Next we see carry forward of losses. First in the interest source adjustment, next is inter-head adjustment, third one is carry forward of losses. How to carry forward? Under the act following loss can be carried forward. Loss under the head of income from the house property, section 71B. Loss under head profit and gains of B or profit or loss, section 72 and 73. Loss under the head of capital gain, section 74. Loss from activity of owning and maintaining of resources, section 74A. These are loss can be as per sections going to carry forward of losses. Other remaining losses cannot be carried forward. Next we see speculation loss. Transaction in which contract for the purchase or sale of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by the actual delivery or transfer by the commodity or script. The speculation loss cannot be set off against any other incomes, but this loss can be set off against speculation income only. Next, carry forward and set off speculation loss. The speculation loss can be set up against speculation income only. This loss can be carried for just 4 years. This loss can be carried for just for 4 years. Continuity of business is not necessary. No need to necessary continuity of business. Filling of returns or loss should be submitted in time. Next, business loss other than speculation loss. Loss carry forward can be set up only against business income only. Loss can be carried forward by the person who incurred by the loss exception to rule. Loss can be carried forward for the 8 years. Return of loss should be submitted in time. Continuity of business is not necessary. Carry forward of unobserved depreciation, capital expenditure on scientific research and family planning expenditures. Next we see carry forward of unobserved depreciation, section 32 subsection 2. How to carry forward of unobserved depreciation? The no limit time is carry forward of the purpose of unobserved depreciation. In the subsequent years, it can be set off against